We're in for the long haul with this. Do you think we're going to be talking about inflation and rising inflation for many more months?
Well,
NFT.
Yes.
What is that?
I'd like to know myself, Peter. I've spent all...
But I mean, that's, how regulated is this stuff? Hello everyone, and welcome back to another True Potential Do More With Your Money podcast. It's episode 95 today, and it's Friday the 19th of November. Today we're going to be talking about investment fads that you need to avoid with some guests who you definitely need to meet because they're experts and they know all about this. So let's see who we've got in the house today. Gregg Lang's back. Hello, Greg.
Hello, Peter.
Have you had a good week?
I've had a great week, thank you.
What's been the best bit up until now?
The best part of my week up until now was revising for talking about cryptocurrencies.
Oh, good.
Good. So that's been
you live an exciting life, don't you?
A real highlight for me, Peter, yes, and that's about it.
I heard you wanted to host today because I know you like it. But
I do, but then when you were on, there's only going to be
that's
one
right.
host, of course.
That's it. Yeah, know your place. Good to see you anyway. I haven't done a
Thank
podcast
you.
with you for a while, actually, so
there you go.
good crack.
And then edition as well.
George, last time I saw you on one of these was a few weeks ago. You'd been eaten by a shark.
Yeah, managed to get sorted out after that. It was,
Managed to shake it off.
Yeah, it was a very near escape. But
Yeah.
it was last time I saw you. You looked a little bit more spooky.
That's right. Than I normally do. And making a debut this week, I think it is Christian, isn't it? Christian
yes.
Gardner, welcome to the podcast.
Good morning, Peter.
Good morning as well. And what else have you done this week for the first time? It is a standard question, but you know that because you watch the podcast.
I certainly do. I actually have bought a new build house, which I put the deposit down on last night.
Oh,
so
wow.
that is a first for me, which I'm quite excited to pick the options for this weekend.
Oh, excellent. So what are you going to do? So you put the deposit down, but
Yeah.
when's the big moving in date? Do you know that yet?
Probably
or?
February, March
Oh,
next year,
right.
so not too long to wait.
Yeah, so we've got plenty of time to plan a housewarming party around at Christian's.
I'm not having you round for a housewarming party.
Oh, well, it's a good start, yeah. Fair enough. Let's move on then. George, I've been so busy this week, I've not had a chance to look at the markets whatsoever.
Yeah.
But I know I didn't need to because I know you're going to tell us exactly what's been going on this week. So over to you.
Yeah, no problem. So, equity markets, not actually a great deal of activity, which is quite nice. They're holding on to the gains which they've made so far this month. Global equities up just around 2.9%. The US stronger performing market over the week. We had some really strong data which came out at the front end, so there was a nice tailwind there. So you had US retail sales numbers in October, they were up 1.7% month on month, which it's encouraging. I mean, there's a number of aspects there. There's a pickup in spending ahead of the holidays, and it's also demonstrating that there is demand there. There's a willingness to go out and spend, even though we're hearing a lot of reports of rising prices as well. So there's effective demand there. We had a similar report come out in the UK there just this morning. So you had UK retail sales up 0.8% month on month. So strength in the consumers really coming through. US industrial production was also up 1.6% on the month. And what you were seeing there is a recovery in a lot of the supply lines which were damaged by hurricanes and bad weather at the back end of the summer there. So that's quite nice. The FTSE 100 was down at the margin. If we think about the reasons why, one of the reasons is you've seen strength in sterling. So around 70% of the earnings from FTSE 100 companies is derived from overseas. So when you translate that back, it's actually a headwind. So that's why you're seeing that differential in the FTSE 100. If we look at the FTSE 250, that's actually positive. So it's more of a currency factor,
Right.
which is playing through there. In terms of the bond markets, again, compared to previous weeks, it was a little bit calmer there. If we think about the different markets, the UK is probably the one where you saw a little bit more volatility.
Yeah.
The story there is really the inflation print, which we saw come out at the beginning of the week. So you had the inflation print, which was showing a 4.2% annual rise in prices. In September, that print was 3.1%. So it's currently more than double the Bank of England's target of 2%. But there's a number of drivers behind that. It's higher energy bills, which we've discussed at length, higher demand for cars, rising prices of restaurants and hotels. If you strip out the more volatile aspects of oil, energy, food, that level came in at around 3.4%. So that's what you call the core index. So a little bit calm when you take out those more volatile aspects. The Bank of England's currently expecting a lot of these what they call transitory or temporary factors, which we're seeing to elevate as we move into the new year. So they're not too concerned, which is, I suppose it talks back to 2 weeks ago when we were on the podcast, we were looking at the Bank of England monetary policy decision to hold interest rates, which actually surprised the market. The market pretty much had it nailed on that Andrew Bailey and the committee were going to take rates higher. I think we're at a very interesting point now where there's a lot of focus on central banks and the direction of travel which they're taking, policy. We've had huge amounts of stimulus and support, which has been very effective. Now it's time where they're looking to unwind, but they're only going to unwind it if they feel that they can do it in a way which isn't going to damage growth. So we're seeing really strong growth come through in the UK, and they need to keep that going. And if we compare that to other regions, European Central Bank, they are operating what we call a more dovish, so they're holding their monetary policy controls on for a little bit longer, and that's why you're seeing quite a bit of strength against the euro in that regard, because you've got a difference in terms of the way in which they're looking to take interest rates, and also the fact that you've seen a bit of a pickup in COVID infection rates across Europe is also having an impact on the currency there. So that's a bit of a whistle stop. It's quite UK focused, that approach, but I think there was some really positive news coming out in terms of reports, and some interesting reports just to pull apart a little bit in terms of the inflation print and how policymakers are thinking about that.
Yeah. I mean, we've been talking about inflation on the podcast for months. So we'll have all, well, apart from you, Christian, but we'll have all been on the podcast. I'm sure you've had meetings about it. And it's been certainly the hot topic for a long time. But I've just noticed more in the last couple of weeks. It's really started to pick up in the mainstream media, and just it's definitely filtered through. It's cut right through to just even like people in the pub, your mates, are beginning to sort of begin to understand a bit more about it. They've picked up on it as well. So do you think we're in for the long haul with this? Do you think we're going to be talking about inflation and rising inflation for many more months?
Well, we've been talking about it for a number of months because we are very forward looking, and we're looking at the sort of factors which we're picking up: demand levels, supply levels, and how much money's actually floating around in the economy. Because you think about how much money the government's put into the economy through furlough schemes, government spending, and then you wash in central bank liquidity pushes as well. So we've had this awareness, and we've been positioning our portfolios in accordance to that. Central banks are guiding to this being transitory. We don't take that for granted. We continue to monitor it, but there are signs that a lot of these factors are starting to roll off. If you look at things like lumber prices, we saw that big peak and they've started to roll off. Iron ore prices, other examples being airline prices as well. So there is evidence, if we look on a month-on-month basis, that we've seen a spike, but some of these factors are starting to cool.
Yeah. And there's a bit of news this week about Shell moving across to the UK,
indeed.
which is a really positive sign for the British economy and generally for Britain, isn't it?
Indeed, I think it's. That's a really interesting one. You had, Royal Dutch Shell, which was dual listed on the Dutch and on the London Stock Exchange, and that was part of the original partnership. And I think when we had Brexit, a lot of people maybe thought companies would gravitate over towards Europe. Not the case. They see a lot of advantages of being a UK listed entity, in terms of accessing finance, but also in terms of having flexibility to really push on with their emission targets as well. So I think that was quite an encouraging story.
I thought so. Yeah. Just I'll take the opportunity while we're talking about that to give a little nod to True Insight, which is our quarterly investment magazine, and you might well have it in the post if it hasn't arrived already. It will be on the way. You can see it online as well. But the cover story, surprise, is a lot about this. It's a lot about maybe the way, if you go back a little while, what people thought was going to happen in Britain around investment and just generally the British economy, and some of it's not. A lot of it's turned out to be a lot better than what perhaps people thought, and the point there about Shell being a good example of that. So I definitely would point people in the direction of an article in there which goes into more detail on that. Christian, right, for our wonderful viewers and listeners who've never met you before, tell us what you do at True Potential.
I am Head of Compliance and Risk for True Potential Wealth Management, so I oversee our compliance teams, the file checking teams, and just ensure that all of our 850 or so advisors around the UK are providing the best possible advice to all of our customers.
Good. So you're the whatever the sort of fail safe. You're the guy just making sure everything's as it should be, and
exactly.
And the advisors are scared of you, or do they like you, or what?
Some are a little bit scared of me, unfortunately. I'm not the most popular man at times, but I think most advisors appreciate that we try and work with them to ensure that clients are getting the right outcomes.
Yeah. And how long have you been at True Potential?
Coming up to 7 years.
And have you always been in compliance, or have you moved through the business to get
I
other
started as a file checker in our
Right.
compliance team. I then became an employed advisor, specialising in defined benefit pension transfers.
Yeah.
And then I moved to the monitoring control team, and then on to head of compliance earlier this year.
Yeah. Tell us 2 hobbies you've got. Are you a secret great violin player?
Unfortunately not. Main hobby is cars, as most of the people in the office
Oh,
know.
right. Yeah.
I've got a track car, so I was over at the Nürburgring in October.
Wow.
It's quite an expensive hobby,
Yeah.
and not what people expect.
Is that because you crash a lot, or?
No, fortunately not. But it's not a hobby people expect for someone in compliance, I don't think.
Wow. Did anyone know that?
I did.
I didn't know that. Wow.
I
You
know.
can,
I
you
knew
can hear
Christian
him
was a
leave the
big,
car park.
big petrol head, and also he overtakes me on the A1 every time,
Yeah.
every night going home. And
Well, everyone does that.
That's not hard with Daisy Duke, yes. Christian just flies past.
Brilliant.
Off
Okay,
he
well,
goes.
there you go. Learn something new every day. Right, let's talk about investment fads that you should avoid. First of all, I want to just pick up on, you mentioned it at the start, Greg, and I know you've got your notes here because you've been working all week. You said that
Yes.
at the start, so it's good to know. We come prepped. NFT,
Yes.
what is that?
I'd like to know myself, Peter. I've spent all week trying to find out. Now,
It's the
I've
one
got-
you missed.
I've got lots of notes on it. It stands for non-fungible token.
Right.
We've got a bit of a crypto type expert in the office, and I've been trying to pick at his brain all week.
Yeah.
And all I could really identify is it's a digital piece of art.
Mhm.
It's unique, as in it can't be replicated. It sits on the blockchain,
Yeah.
and you essentially own it. So the way it was explained to me in simple terms was, you've got the Mona Lisa. There's only one of them.
Yeah.
Sits in the Louvre. It's an original. You could buy that, but a digital version,
Mm-hmm.
and that digital version could be a picture or a kind of a short video.
Mm-hmm.
There'll be one of them. Because it sits on the blockchain, it can be identified as an original.
Yeah.
You buy it, you own it.
Mm-hmm.
You can then trade it, so it can go up in value, down in value, but it can be replicated, as in you could make a knockoff version, but it would never be identified as the original. So, yeah, digital art is probably the easiest description, but you can go down a real rabbit hole of trying to understand how they
Yeah.
work, how they
Yeah.
can be purchased. I read last night, just in the last couple of weeks, the most expensive NFT has been sold, £532 million, which is just ridiculous.
What was that for?
For an image.
Oh,
an
just an
image,
image.
yeah, a cartoon image of a little head, and that was it. It is just a digital
Yeah.
picture.
I know I had some spare money knocking around, and I just thought I'd have a fun at it, but
Just a little bit
see
bored.
what
You
happens.
could have bought Newcastle, but you bought an NFT instead of NUFC.
That's where I went wrong. I thought I was buying a club, but I wondered why only a picture had arrived of it. But anyway.
Yeah.
Right, well, I mean, that's interesting to know. Let's just pull back a second, though. Why are these sort of alternative investments, if you can call them an investment, I mean, I suppose it is in one respect, but a very different class of investment, why are they gaining so much attention? Because if we'd done this podcast even just maybe 2 years ago, we wouldn't be talking about that and crypto and the other things we'll get into. But why has it come to the fore so much, would you say, George?
I knew you'd come to me. Well, it certainly has, Peter. I think crypto markets. I think they're over a $2 trillion market now, so they have gained a lot of momentum. So if we break down, why are people investing? Well, they view it as an investment. They view value. They view that there is a return in it. In terms of what they're thinking about there, if you're a longer term, I imagine they're thinking about crypto and its use as a part of infrastructure and a payment mechanism, essentially. If you're shorter term, it's probably around the speculation. I think people are being more attracted to it because there is a lot of conversation, there's a lot of promotion about cryptocurrency on social media, and that in itself creates what, in terms of behavioural finance, it creates quite a lot of herd immunity, momentum. That momentum can go 2 ways. It can go up, which attracts the attention. It can also come the other way, where you see the volatility. And the volatility is, again, a conversation piece in its own right, probably the one which, as investors, we would be more cautious of in terms of, cryptocurrencies volatility. If we take Bitcoin, I mean, there's various different cryptocurrencies, but the most popular is Bitcoin. The volatility of that is over 80%. If we think about the US stock market, that's around 18%. So it's an incredibly volatile asset because you've got a huge amount of people driving that momentum, both in and out, and that's why you see these big spikes. But I suppose there's two camps there. You've got the long term who do see this as a credible payment mechanism and see an opportunity for long term return, and then you've got the shorter term investors who are just almost jumping on the bandwagon and trying to make a quick buck out of this.
I think that's interesting, because when I first came across blockchain, I still don't fully understand it, but blockchain and Bitcoin a few years ago, it seemed like, you think, oh, that's quite interesting, that could be useful, maybe that's just the future of money, digital and things on blockchains versus, paper ledgers and all the rest of it. I mean, I'm showing my limited knowledge of all this, but that conversation has gone, in my view, seems to have gone from that's got a use and could be quite useful to now just seems to be millions of different types of things, and people paying hundreds of millions of pounds on stuff, and huge spikes and massive troughs and all the rest of it. It just seems to have gone crazy. But I mean, how, just in terms of normal, ordinary investments that we would talk about, what would be an ordinary investment that you would normally deal with every day, like an ISA, a GIA, a pension? You've got them on one side, haven't you? And they would be the main ones. But then on this other side, you've got all these crazy. What do you think is the main difference between the two camps, if you like?
Well, the key for the assets and funds that, say, George works with is there is something behind them, whether it's a currency or a company, a share price. And, when you invest into a share, as an example, you have a company which is making profits, and part of the price movement is based on how much money that company is making, how it's performing. For a lot of these, it's purely whether someone else wants this asset, and that's how the price is determined. So we've seen schemes in the past where you have lots of people invest, and then it goes out of favour, and suddenly, because no one else wants to buy it, there's no one to set a price effectively. And I think one of the difficult things with NFTs and cryptocurrencies is there's a lot of demand from, George mentioned, herd mentality. I think it's the fear of missing out.
Right.
A lot of people see other people making money. It's been in the press. We've seen people make a lot of money on cryptocurrency, but you never hear the downsides in sort of the press. So people see, someone making £1 million and think, I want a piece of that. Particularly after the last 18 months, people have a lot more spare cash and savings, and they're looking for something to do with it. I think it's also driven by younger people are accessing these a lot more, and they're often dealt with through apps. Younger people aren't as experienced as older people who maybe have had pensions or ISAs, and so are more interested in your standard investments.
60% are under 35 years old of investors in crypto, so that just strongly backs that up. I think for me, when George mentioned about Bitcoin, that's the most popular. That's mentioned on social media on average every 3 seconds.
Right.
So you just can't avoid it. Most people spend a couple of hours a day on social media platforms, and actually, Christian and I were talking about this morning in doing a little bit of research about this. All the sponsored advertisements now coming through on my phone is all about Bitcoin invest now, and even when you've got the TV on, every other advert, you're at the football game at the weekend, all the hoardings
I've
now
noticed that a lot in the last few months.
Is forex, it's crypto, it's it's encouraging. In the main, it's obviously a targeted audience of males. 80% of investors into crypto are male, which is another kind of almost eye opener. So, I think Bitcoin. I think Christian's right. I think it's a fad. I think people are going. I know Bitcoin went from almost cents to $50,000 owning one coin called a Bitcoin. So if you had 5 or 6 of them.
And I think that I was going to ask whether you think this is, because it's a few years ago now that Bitcoin, had that made the big thing, and everyone was, not everyone, but people were making a lot of money on it. That is a few years ago. You don't quite read so much about that now. But do you think what we're seeing now with lots more types of crypto and all coming along and all the things we're talking about is just effectively the long tail of that big event a few years ago, which was, which has not really been repeated?
Yeah, I think, well, again, we were having a joke about this morning, but most listeners, watchers have known about Squid Game, which was a Korean TV show on Netflix, a very dark and interesting TV show. But on the back of that came a Squid Game coin. So you could go online and purchase a currency, which was called Squid, which is silly. Within a matter of days, what it's essentially called is a rug pull. So all of the developers, all of the creators of this coin drive the value, and overnight £2.5 million gone. So everybody created the hype, got all these people investing in it, drove the value, which meant their shares went from pennies to thousands. They sold them all at the same time. So all of the developers basically round the table, 1, 2, 3, sell, they've obviously profited from it.
Yeah.
The market's lost confidence. All of the other investors lose, and they still can't even get their money out. So that's what they call in the game a rug pull.
And that was Squid.
Squid.
Which turned out to be a bit of a damp squib.
Correct, Peter.
Close.
I've set you up there to
Yeah.
just tap that one in.
Well, it sounded a bit fishy to me, but
I think it's worth noting as well that particular coin hit the press because of the link with the Netflix series.
Yes.
I think you said this morning was that 900 coins are released per day.
Yep.
So there's probably a lot more of this going on that we don't hear about. And we have also a lot of coins being released with very similar names to the popular coins. So a lot of people might see an advert and think, great, I know I'm investing into what everyone else has, but it's just a replica. There was a story in the news recently, someone on Instagram with 250 million followers was advertising a coin as a great investment, but it had been developed a month before. Now, George, I'm pretty sure you wouldn't be advertising an investment that had been created a matter of weeks ago because you don't know what it is. And too many people, I think, aren't able to do the proper background research to understand exactly what they're investing in.
Totally, yeah. I mean, I'm persuaded, squids and hundreds of coins and things. I'm absolutely persuaded to make sure I never go anywhere near this stuff.
Well, there's also the obviously the whole Elon Musk thing, which I know we've covered off in previous podcasts. A guy who can go on Twitter, make absolutely no sense whatsoever, but make a reference, and all of a sudden the market can drop 20%, and then he can go back online and almost, I was only joking, everybody, and up it goes another 20%. So almost one individual who can control the market like that. And even for a joke, he launched a coin called Dogecoin, which had a picture of a dog on the front, and it was a cartoon dog, and millions and millions of pounds.
Joking aside, there are some. I mean, are there people out there who are, if you like, trying to treat these as serious investments? I mean, look, some people like to put a bit of money on the horses, or a bet here, a bet there, whatever, a bit of a gamble. That's, fair enough. As long as you know what you're doing and you're within your risks and all that, then who am I to say don't do it? And if you're treating it this like that, then you're prepared to take the upside and the downside in equal measure. Okay, but are there people out there treating this as, if you like, a serious way to invest versus, say, for example, an ISA or a pension? Because that to me seems like not something I would want to do.
I suppose bringing it to the initial conversation, some people think of it as, because there's a limited number in some of these coins. I appreciate some of them are being churned out, at a rate of knots. But some of them believe that because there's a limited number, it's got a store of value properties. It's similar to gold and therefore could be used as a hedge against inflation. But I suppose the real challenge there is these are very young assets, and we've been in a low inflationary environment for some time, so they've never really had a thorough back test in that regard. So if people are reading about the uses and the properties of digital currency, they may read about its use as a payment mechanism. They may read about it as its use as an investment. And there's a lot of information out there. If you just Google this, you'll get pages and pages, as you mentioned. It's how frequently it's mentioned.
Yeah, but I mean, you and your team look after what, £21 billion of funds of people's investments, and you're regulated to within an inch of your life. Quite rightly, by the way. We like that. But I mean, that's how regulated is this stuff?
Well, Christian, you could probably throw your opinion on here as well, but it's a very grey area. Essentially, it's not something which we would hold in that regard, because it's we hold what you call a UCITS instrument, which is another acronym, which is it's essentially the European regulated structure which we hold, and we've got to invest in what we call transferable securities, which has certain liquidity requirements, and also an amount of look through, which goes back to Christian's point of, are these physically backed or are these just purely based on derivatives, as it were. So there's a lot of debate across Europe as to which, the Bank of Ireland have been discussing this heavily, the FCA have been discussing this heavily, but it's not something which we invest in.
Yeah, and in terms of the FCA and the regulators, do they cover this stuff? Is this regulated by them in the way that George's funds would be?
It's a really interesting topic because the actual currency itself is not regulated in any way, shape or form. So it's, there's a lot of scams out there, and even the more popular coins have no regulation whatsoever. The actual exchanges, so cryptocurrency exchanges, now do have to be FCA registered but that's only for money laundering purposes. So what you're now seeing is some currency exchanges saying, hey, we're FCA regulated, but in actual fact, it's purely and simply to stop criminals laundering money.
Right.
So it's not protecting the customer.
Yeah.
They have no right of recourse to the Financial Ombudsman Service if something goes wrong.
Mm-hmm.
They have no right of recourse to the Financial Services Compensation Scheme, which would give protection to investors or bank account holders.
Yeah.
Charles Randall, the chairman of the FCA, said in September in a speech that the FCA need more powers to regulate the issuance of tokens and the advertising of them.
Mm-hmm.
So the FCA are essentially saying to Parliament, we need more power to regulate this, but Parliament haven't taken any steps yet. On NFTs, there's not even any guidance from the FCA as yet. So it's a bit of a strange area with NFTs because you are purchasing something which could be classed as an asset that might fall under some investment regulation. So it might be straying into a regulated activity, but there's no actual official line yet.
So it sounds like you're on your own pretty much if things go the wrong way. I just want to go back to the advertising point that you made and Greg touched on as well. Because I'm like you, I've seen it on the sports, on TV, whatever it is, you see it all advertised. But if we wanted to advertise any of George's funds or anything here, the amount of risk warnings and things and hoops you'd have to jump through. Give us a feel, because I mean, it's obviously not my area of expertise, but give us a feel for the kind of things that you would have to do or the advisors would need to do in terms of promoting regulated investments versus, say, any of this stuff.
So the simplest form of advertising we can do is an image advert, but that must have our company name, logo, contact details, and details of the regulated services that we are providing. If we want to do what I would call a proper advert with some more detail, then we must have our firm name, contact details, reference number for the regulator so that other people can look us up, and then we have to have a series of risk warnings. So, for example, for George's investments alone, we would have to warn that the capital is at risk. You may not get back what you invest. We have to have past performance warnings if we reference any performance figure. So you often see cryptocurrencies advertise, 120% returns in a year. Well, we couldn't say that. We would have to use a long-term average for performance and warn people that that might not be repeated. If we're offering an ISA, for example, which is a tax haven or a tax-free savings account, we even have to warn clients that tax rules may change in the future. So what you quite often see is an advert this long and then risk warnings that are even longer, which puts people off in a way, because you think, well, if you have to have that many risk warnings, then there must be something concerning. And then you see an advert for an NFT or a cryptocurrency, often issued by very large institutions. On the sports advertising, I'm not sure if you've seen this, Greg, but Red Bull and McLaren Formula One teams are offering NFTs of parts of their cars. So you can buy a McLaren wheel, for example. But again, there's no risk warning or any kind of disclaimers that come with that.
It'd be pretty weird to have one of those on your car, wouldn't it? You need to buy 4, surely, otherwise you're going to be. I mean, yeah. Why would you want a wheel? Would you get the actual wheel or just a picture of it?
No, you just get a picture of it.
Oh, just a picture. You can't even put it on your car.
Back to the whole digital thing.
Yeah.
It's
It's like,
it's all online.
I'm not with it at all. I don't know this stuff. All I want is
a tyre through the post.
Well, I don't know. You can. Max could turn up with a tyre and say, "There you go." That's the
I
NFT.
think you'd pay for that, wouldn't you? If Max did turn up with a tyre.
One day, mate.
Blimey, I'll stick with my pension and my ISA. Just to play devil's advocate on it, then, is there any investment value in crypto? Are we being a bit too dismissive of it? Maybe there is. I do read a lot of the growth stories of it, and I do see the upside. And yes, we talk about downside, but there is an upside to it. There are people who are making money. Is it a suitable investment at any level?
I do own some cryptocurrencies. The way I ended up having it was, as a frequent traveller, I've got what's called a Revolut card. It allows me to do currency exchanges, and when I get back from holiday, if there's money left in there, once I went to move it back into the bank into sterling, and I seen their crypto, and I thought I'll have a look, and I think in total I've purchased about £80-90 worth of crypto. Checked this morning, it's worth £54. It went down 13% in an hour this morning,
right,
just before coming in. So you see these stories, when I mentioned the Squid Coin, for example, in that article it had, Mr. and Mrs. Jones who've lost their whole pension fund, they've lost all of their life savings. If my pension was deviating 80-90%, I wouldn't leave this guy alone all day every day. I would kind of say, what's going on here, George? But that's the other thing is, I can't do that. So my currency goes down in the crypto wallet, and I'm going, it's gone. You know, I can't do anything about it, and there's little to no liquidity in there, so I can't just choose to sell. There's got to be somebody to buy it. It's not always. So for me, I think you mentioned it. It's the put a couple of quid on the horses at a weekend. You know, don't bet on Newcastle at the weekend, and that's. I think that's maybe where it can sit. And the only thing you ever see about is the people that win.
Mm-hmm.
You rarely see the ones that lose, and I think that's vital. So you can quickly lose it all. So I would say, if you did want to speculate, make sure that it's just speculation.
Do you ever see the day where if it did become more regulated, and let's say there was a bit more scrutiny over it, do you ever see the day that this kind of stuff could have a place in a portfolio of someone's investment?
It is possible. There are higher risk investments which are available, VCTs, EIS, SEIS, and sorry for using so many acronyms, but these are all quite rarely used but higher risk investments with certain tax advantages. So it is possible that with more regulation it would be something that could be considered, but at the moment with the complete lack of regulation it's not something we would touch. And Greg, you made a really good point there that if your pension dropped in value we could, grab George and say what's going on. With any regulated investment or advisory firm, you've got managers in place, so senior managers. They are authorised by the FCA and have to be held accountable. And the change, we had the introduction of the senior management certification regime a couple of years ago, and that means that the SMF or senior manager within a firm, and I think there's 8 within True Potential Wealth Management, can be personally fined if they don't take actions to protect clients. And that's not just while you're in the role, that's up to 6 years after you leave the position.
Are you one of those people?
I am, unfortunately, yes.
We've got 2 in the room, Greg. We know where to come and speak to them if we need to.
It just shows those layers of protection. Not only you've got a right of recourse to the firm, but then other, financial ombudsman and FSCS, which just doesn't exist in the NFT or crypto world.
And I think that, for me, I can only give my perspective in terms of what we're doing every day, and it's here to help clients achieve their investment objectives. They can be, near term in terms of buying a property or education, or they can be long term in terms of retirement. But all of our efforts are focused towards helping clients achieve that. We use a range of different assets to do that. We invest in stocks and shares of companies of all nature across the world. We invest in a range of different bonds. We hold a whole host of instruments. But holding an asset which has got a volatility which is 4 or 5 times that of stocks and shares, which are considered one of the more risky assets, is something which makes it very difficult in order to help us achieve that objective.
And just thinking about alternative investments in general, I mean, people have always invested in, I don't know, art. You mentioned the Mona Lisa earlier, or whatever. People have always invested in wine and things like this. Is this not just the modern day equivalent of people doing that?
I suppose there's maybe another way to look at it is, how do you value these things? I mean, I can look at a company and I can strip apart its component parts. I can look at its cash flows, its liabilities, its assets, its upcoming orders, and put a valuation on that. And I could build it out on this table and it would make sense to everybody. But I put an NFT on the table, and to the point, well, am I getting this wheel or am I not? Am I getting a photo? How do you put a value on that? I think that's a really key differential, and what's important about the sort of products which we're investing in is having absolute understanding. Is okay, this is what we're investing in, this is what it's here to do, and this is how it's going to help us achieve that objective.
I think to put it in context, I seen a real life NFT yesterday, and it was a rooster with octopus tentacles, and that was it. And it was a cartoon drawn on somebody's phone, and they physically owned that image. I mean, you'd look at it and you'd just delete it off your phone because you think it's a daft picture, but actually it's got a value. But tomorrow it could be worth 10 times. The day after it could be worth nothing. And I think that's the one for me. I just find that too much to even comprehend.
This comes back to the unique nature of art. Because if you've got a painting done by someone that's very skilled, then you can look at it and go, right, that is unique, it's handcrafted, no one can remake that. There was a really interesting story in BBC News in August where a 12-year-old had been practicing coding over summer, and he'd written a program to make NFTs, which was a little picture of a whale. Now each one was unique because it was a slightly different colour or a slightly different position, so in pixel terms that was different. And a 12-year-old made £300,000 over a school holiday.
Right.
But I would question who's going to buy the art of a 12-year-old in the future. Is that really going to have an actual intrinsic value, unlike a bottle of wine, which there is a limited number of, and you can't remake that wine?
And what was he drawing?
Wales.
Right. Sounds like a whale of a time.
Yeah.
Over his summer holidays, didn't he? Sorry. Right. Let's move away from crypto for a second and just talk about, because another one of the little fads is the rise of the day trader, right? Trying to do what you do, but you know what you're doing. And people going on websites and apps now and just, I'll buy a little bit of this, sell a bit of that, as if they're the world's greatest trader. And there's a downside to doing that as well, isn't there, George?
Yeah, I mean, there was a famous example which I think we discussed in this room again, GameStop earlier in the year, which it seems a while ago, but it was a big news story because, again, there was a huge amount of day traders. You had hedge funds and all sorts on the other side of it, and it was one of those where, again, a lot of media hype, a lot of momentum behind it. That momentum tipped. And it had a systemic impact, not just for GameStop and everybody holding it, but it actually washed through the system, because it's showing just how much frequency and volume of day trading there is going on, and that really elevated during the global lockdown, because people had more time and more cash in their
But
pockets.
day trading gives it probably a little bit too much stature, because they're not really trading. They're just betting, aren't they? It's just betting websites.
It's a gamble.
Right.
Absolutely.
They're just, because you are trading with fund managers and partners and all the rest of it. But if I just go onto a website and think I'm a trader, I'm not really trading anything. I'm just having a stab that's going to go up and it went down.
Yeah.
And because I wouldn't have the access to any of the data or the knowledge or the expertise that you would have.
Well, I mean, the trading apps have been developed where you get a lot of fancy graphs on there. You get what they would advise as stop limits, advised buy limits, which, there's a lot of, again, it's a really grey area, that, because, okay, what's the logic behind it? So why is that your buy point? Why is that your sell point? Why is that the tipping point? And it becomes self-fulfilling, because if they tell traders, these are the times to buy and these are the times to sell. Well, because there's so much volume, they can almost drive that pattern themselves. Yeah. So there's a real circular impact of it.
Yeah. I think it's. I just think it's. I find it frightening that there are people out there sort of. I mean, good. Fair enough. As I say, if you've got money to burn and you don't mind burning it, then fair enough. But it sort of. I find it a bit frightening, really. But I mean, the other point is that we've made before on the podcast is, these movements happen. Supercomputers behind the scenes, things happening in the blink of an eye. You'll never be able to catch up with that if you're just sitting at home trying to do this stuff. And I'm not against people having a bit of fun. If it's just a bit of fun and that's what you're doing, then best of British. But if you're serious about trying to grow your money, this feels like not the way to do it.
Yeah.
Would that be fair or not?
Yeah, I think I've seen a lot of adverts of people saying, you can look for signals. Well, if it was that simple to look for a signal, as you mentioned, someone's written a program to already catch that signal, and they're going to outperform you anyway. Yeah. But I think the other thing to be wary of with day trading apps is you quite often see them advertised with a code, which a unique URL. Yeah. Now, I know someone who runs a YouTube channel who was constantly posting about how much money he's made on a day trading app. He'd never invested a single penny, but every time someone used his referral code, he got a free share. Mm-hmm. And within a matter of months, he made £4,500 in free shares. So it looked like his portfolio, when he posted the graph, was going up and up. Mm-hmm. But he wasn't doing a single thing. Yeah. So again, it's looking through the adverts and ensuring that you actually understand what you're looking at here.
Mm-hmm. Have you ever fancied trying to replicate what George does?
I couldn't, and I wouldn't know where to start. I think they going back to the start when Christian said he's just bought a new build house. He's not going up there brick by brick, putting it all together. He's got the experts doing it. And for me, it's the same thing. My home where I live is part of my estate. It's part of my wealth. There's not a chance I would go and build my own house. Yeah. And it's the same with investments. I wouldn't know where to start. Yeah. I've been here for over 10 years. And, I sometimes go over to George's desk. He's got the Bloomberg terminal. Mm-hmm. You've got all the information you've got at your fingertips. Yeah. And if I was to go online, I'd think, well, it probably is the equivalent. You go down the dogs, you read the Racing Post, and you go, I like the look at number 6 because he's grey, and that's how you end up picking your dogs. it's the same thing
Yeah.
for me, Peter. I'd be looking
I'm
at the
like
same
you.
time,
I'd be
I
looking
wouldn't
at
want
a
to.
whole bunch of numbers and
Yeah,
Christian-
I wouldn't want to
Christian's
blame
got a
myself
vision
if it all went wrong. I wouldn't want to be. I'd only have myself to kick. Whereas I'd rather come and kick you. I would never kick you, George, because you're bigger than me. But you know what I mean.
Yeah, I do, and it's actually a good analogy that Greg,
Thanks,
because Christian's got a goal at the end. He knows what the house he's purchasing
Yeah.
is going to look like at the end. He's not up there every day looking at it going, oh, that place looks a mess, right? That's it. I'm going to cash out. I'm going to cancel it.
Yeah.
Or he's not getting emotional about it in the process. He's looking at it and saying, right, this is what I want to buy. That's what it's going to look like.
Yeah.
So let's just wait this out and let the professionals get on with it in the meantime.
Couldn't agree more. You mentioned scams as well a few minutes ago. Just touch on that point as well, because as I say, maybe a few years ago when blockchain and stuff had a valid purpose, but you do often get as things develop, the rise of the scams. I mean, is that a real? Is that really a concern?
It's a huge issue in the industry
Is
at the
it?
moment, Peter.
Yeah.
We've got not only crypto scams, which Greg, you mentioned, the rug pull of people creating either false tokens and nothing ever actually exists, or you do create a token, get people to invest, then pull all the money out. With NFTs, you have no idea what you're buying, and many people wouldn't even know whether they hold an actual NFT or whether you've just had an email saying, yes, you've got something. And then in the wider industry, we're also seeing scams become a lot more complex. Whereas you used to get an email from a Nigerian prince saying, you've inherited $20 million, just send us £5,000 to release the funds. We're now seeing impersonation scams.
You mean that was a scam?
We're now seeing impersonation scams where a user's email will be hacked.
Yeah.
They will watch for an important email, like from their bank or their financial advisor coming in. They'll get rid of that email quickly, set up a very similar email address, and then send another email with, say, different bank account details.
Yeah.
So there's a huge number of ways people can be scammed these days, and it's really important to make sure that you're not only dealing with a regulated firm, but that you're actually dealing with the individual you think you are from that firm.
Yeah, that's right. Well, wow, we've covered a lot this morning, and definitely some food for thought. George, just to kind of begin to wrap up a little bit there. So anybody who's maybe listening to this or watching this and has maybe been thinking about buying a squid or or a wheel or a picture of one anyway, give us your pitch about why a multi-asset diversified portfolio is the one to be in. What give us your kind of like your reason why you think that would be the case.
So why multi-asset? Multi-asset means not all eggs in one basket. Regions, companies, company types, sectors, size, all different range. Same in the bond market, same in terms of precious metals, gold, silver. So number one, you're not just picking 5 stocks which have been promoted on your Facebook. You've got a diversified asset exposure. There's a plan behind those. There's an objective in terms of where we're trying to get those from a return perspective. So that's in line with your goal. But also we're managing the volatility as we go through. So the work which we're doing day to day is to ensure that, one, we're helping you work towards that objective from a return perspective, but the journey along the way is something which you're comfortable with because we've aligned it with the appetite which you've set out right at the beginning of that investment. When you go through that questionnaire, what we're doing is gauging what type of investor are you, what's your risk appetite, how much risk are you prepared to take, and what's your return expectation. And let's marry the two, put these in a product and work towards that in a multi-asset approach. So I think that's the key aspect there. Also along the way, there's various, so that's from an investment perspective in terms of return and volatility. Latched onto that, we've also got a number of governance controls which are ensuring the liquidity as well. So the liquidity is all about how can investors get out of their investment if they want to at a fair price. And I think putting the two aspects together is a really powerful combination for a diversified multi-asset.
And I always like to give you the chance whenever you're on, George, to tell us about your performance on this, over years, because the portfolio has been around for a number of years now that you look after. So and they do very well. How did they do?
Yeah, I mean, we launched in October 2015. If we take out your portfolio charges, the balanced portfolio is up 55%, the aggressive portfolio is up 80%, even year to date. Compare that to balanced, it's up 10%, 16% in the aggressive. So it's
all there. I mentioned True Insight. People can go online, they can get this through their post box. It's all there, all the performance figures, and you're getting those amazing returns like you just said, but all regulated, properly regulated, been people like Christine looking after it, and it's all very transparent. And we're in this building, so people, we're not, some random place you can't come and see us if you need to.
Yeah, exactly.
Good. I'm reassured. Right. Really interesting stuff. Let's. I think we're probably nearly out of time. So, thanks very much for today. I think it's been really interesting. What are you doing this weekend, Greg? Are you buying any photos of tyres or
I'm
anything?
not be buying any photos of tyres. No,
No?
I might watch the tyres. The Formula One's on this weekend. So
Right.
I might,
Where is it this
might give
weekend?
that a watch. It is in Christian can tell us.
Qatar. I knew the answer. I was
Qatar.
just giving you the chance to.
Saudi Arabia as well.
Yeah.
But I
First
wasn't
time at
sure
this
which
circuit
one.
as well, I think, isn't it?
Yes,
Yeah.
yes. So I'll probably give that a watch on Sunday, and
Good.
any spare time I'll be out running. So
Of course.
that's
Yes.
about it for me.
Well, we'll need to come back to you because you're coming towards the end of that.
I'd like to
we've
think
talked
I'm
about this
coming
before,
I'd
but
like to think I'm coming towards the end, Peter, but I've got a little bit further left than I thought. So,
and give us what's the website? Run, Greg.
tpllp.com/Greg. But
Yeah.
I'm sure Graham and Katie can put it on the
Yeah.
the bottom of the video.
So if you want to know more about what we're talking about, click on that and maybe even bring them a few quid if you feel up for that as well. So yeah, good luck with your running. George, any plans for the weekend?
I've got to write a best man speech for next week.
Right.
So I've got the bones of it laid out. I'm just trying to. I might take two, Peter, because I'm not. I don't know his side of the family too well. So
Right.
I need to sort of hedge my bets a little bit. But
ever the investor. See what I mean there?
I'll give him a bit of
Have you
stick.
got any risky jokes in there?
I've got a few.
Yes.
It's actually.
What's your risk appetite here? Are you feeling quite aggressive on this one? Or?
I'll see on the day.
Yeah, exactly.
I can take it anywhere.
That's
So it's
right.
Is it a bit of Dutch courage and then the other one comes out?
two pockets.
Make sure you get the right one.
So that's a plan. I need to get that done, and then
Yeah.
I can start to relax.
Oh, good. Oh, good luck with that. And Christine, did you enjoy your first podcast, by the way?
Yes, it's been really nice.
Good. Will you come back?
I'll hopefully so.
Good. And your plans? Any handbrake turns in the bottom of the car park? Is that the plan for the weekend? Or?
Not quite. So Saturday we'll be sorting out the new build options, and then Sunday watching the Formula One. Same as Greg, although we do support different drivers. So we might have an interesting
Are
conversation.
they the two championship protagonists?
Yes.
Yes.
So you're a Max fan, and you want Lewis to win his 8th.
Yeah.
I think it'll be, won't
Yeah.
it? Yeah. Okay. And then do you not fancy yourself as a racing driver, Christine?
I would love to. It's rather expensive, unfortunately,
Is
as
it?
a hobby. Yeah. So I'll just stick to normal track days for the time being.
Yeah. What's the best track you've because you do racing, don't you? Or you drive around
Yes,
tracks?
drive around tracks.
Not in a race, or just go for the experience. Is that
Just
what it
sort
is?
of the experience.
Right. And what's the best one you've driven around?
Probably Spa.
Oh,
Just
nice.
for the historic and going up Beau Rouge, is absolutely incredible.
Yeah. Oh, wonderful. There's a whole separate podcast in itself, here, isn't there? Brilliant. Okay, well, look, thanks very much. Greg, George, Christian, great stuff. And thanks very much to you also for watching. I hope that was helpful. I hope it was interesting. I'm sure it would have been. And if you want to know more about the work that we do here, you can subscribe to this podcast and you'll get more of this kind of information and everything else that we do as well. So for now, thanks for watching, and we'll talk to you next time.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.